Okay, how do we help at Yellow Tunnel? Tradespoon. How do we help you at Tradespoon? So we do have elite service, right? We do have elite service. First of all, another thing that let's talk about elite service. Don't trade alone, right? Become part of community of traders. Hopefully it will be Tradespoon, but if you find other community that gives you information based on your trading style, which is fine, but don't trade alone, right? Join the YouTube channel. You can do it for free. We have live trading room every morning, and first hour of the opening session, last hour of the closing session, and you can ask questions, and we will help you, guide you through trading, because the most important, you see it basically everywhere, every email, every Twitter, every news. It's right now we're in the traders market, and successful traders, when they get into a trade, they think about risk, how much money they are risking. Amateur traders, right, beginner traders, think about how much money they are making, right? It's a natural tendency. That's how I was. When I was young, I was excited, I always liked to trade options. I started trading. I didn't care how much money I lose, right? You only live once. You think about how much money you're gonna make. I do believe that to be a successful trader over a longer period of time, your first thought has to be, how much money am I risking, right? And then you think about how much money am I gonna make. So you do have to rewire yourself, right? We're not wired that way. Everybody has different personalities. I'm gonna say majority of the people, or people that have similar personality that I have, first think about how much money they can make. And they either don't think about how much money they can lose, or they think about it when the trade goes against them. So before you get into the trade, I encourage you to keep a journal and ask yourself first question: how much money am I willing to risk to get into this trade? And how much risk do I have across my whole portfolio? Because you might have very small risk in one position, but if you have 20 positions or 10 positions, then there's a lot of risk. So the key to success is risk management, right? So that's what we help you every day in the live trading room. That's all. I start conversation about what is my target gain, what is my stop loss, right? Let's say you want to buy QQQ, Tesla, Microsoft, Apple. You can see today they're all trading the same way. It's not like, sometimes there's exception, but it's not like Tesla is up 5% and Microsoft is down 2%, right? Google down 2, Apple down 2, Amazon down 3, Tesla down 3, some kind of multiple, but they all move in the same way, right? And Goldman Sachs is down, Morgan Stanley. Well, maybe they're not down as much as Amazon and Tesla, but tomorrow they might be down more, and Tesla and JP Morgan will be down less. So let's make an assumption that they all move in the same tendency. So when let's say you basically say, Vlad, I like your reasoning, right? Okay, I think 200-day moving will hold, maybe even 50-day moving will hold, right? Somewhere in this, I'm gonna start buying, right? So I'm gonna say, okay, I'm gonna buy QQQ. The first question on your mind, right? Your first thought is, I think it's going to get to 310. I can make, 8% return, right? Very quickly. That should be the second thought. The first thought, at what point do I want to exit this position, right? You might say, listen, well, if you're doing day trading, maybe 200-day moving average, but at least say 50-day moving average, right? If we drop below, you have a lot of support here, right? October high, November high, and then 50-day moving average, right? So you can say, listen, I'm willing to risk maybe, well, that's, at least let's do 10 points. Look here, if it drops below this line, right, this is the line, right? This is that support level. But if it drops below 280, I'm out, right? So what's my risk is 10 points, right? So I'm risking 10 points. Average account is $10,000. I propose not to risk 2.5%. I propose to do dollar cost average or option laddering, where you split the trade at least into two. That means you're risking $250 per position, and you split it into 2 trades where you risk 1%. You risk 1% in each trade. If you're doing options, maybe you spread it among different strike prices or different expiration months, but you're basically risking $100 per trade if you're managing $10,000. Right? This is what I believe successful traders think about, right? They don't think about, okay, I'm going to make 8%. They think about it, okay, maybe I'm going to buy at 290, right? 10 points, right? That means I can buy 25 shares. 10 points times 25 shares, $250, right? And then maybe I buy 5 shares here, right? I buy 5 shares today because I think market is done selling off and next week it's going to rally off of 200-day moving average. But if I'm wrong and it drops, let's say 285 or gets close to 280, maybe I buy another 5 shares, right? This way, you know, if I'm wrong and this November-December level doesn't hold and the 50-day moving average hold, then we're going to drop probably to the downtrend, which is going to be roughly 270, right? So if you want to wait till 270 downtrend, okay, then you buy only, you know, 5 shares. If you're waiting for 270, you know, if you're waiting for 280, then 10, you know, sorry, 25 shares. If you're doing 270, then 12 shares. And you write it down in the journal, right? You write it in the journal, say, listen, I think more than 70% of the time, 50-day, 200-day moving average will hold. We broke decisively above the downtrend. I'm targeting 8% rally, right? I'm targeting 20 points to the upside. But to the downside, I'm not willing to risk more than 10 points, right? Pretty good risk versus reward trade. But you always think about risk, and you do not want to have more than 4 positions, right? If you have 4 positions at 2.5%, right, 10% drawdown, right? Let's say you end up on the wrong side of the trade, right? I actually thought that we're not going to break the downtrend. I was very wrong, right? We actually, markets swing a lot higher than, you know, I anticipated. Probably most people anticipated, right? Most people did not anticipate technology to rally. Most people anticipated value stocks to rally. So I think most people got caught by surprise. I mean, unless you're in a, you know, no landing zone since last January, right? If you believe in no landing last January, then you say, no, this is not a surprise. But, you know, you were down 40% before this happened. But so, you know, the only people that didn't think this was a surprise, if somebody actually believed in, you know, soft landing from last January, from the last 12 months. So same thing can happen here. I think it's going to be this, right? But what if it's this, right? If I have 4 positions, 2.5%, I'm down 10%. Am I happy? Not really. There's nothing to be happy about, but I can regroup. I can go back to the whiteboard and decide, do I want to adjust? If I'm down 20%, if I'm down 30%, this is where I get emotional, right? This is where I get emotional, and then, you know, usually, you know, I'm out, right? Or I take a break, right? I put myself in the penalty box. So the goal is to be down less than 10% on any of the cycles. What do you do with the rest of the 90%? Let's say you're trading options, right? You're trading options, you only have 4 calls. The usual questions to me, what do I do with the rest of the $9,000? Well, first of all, don't worry about it. You know, cash is the king. Second one, put it in a money market fund. You know, get your 5%, right? A lot of people say, Vlad, you crazy, what's 5%? When I'm gonna make $50, that doesn't make a difference. Okay, you know, you might have, you can have 8 positions, but if they're down 2.5%, right, and you get caught in one of these moves that happen very quickly, you're probably not gonna be able to time them, and you're down 20 to 30% then, or more, then it's a problem, right? Most of the time, you're just gonna stop trading. So from that perspective, having, you know, 90% of your, assuming you're trading options, obviously if it's stock, you're gonna be, you know, always think about options as derivatives of stocks. You might only have $1,000 in, you know, spiders calls, right? Which is fine. What do you do with the rest of the 9,000? Well, just remember 100 shares of spiders, right? 100 shares of spiders, you managing, or QQQ, right? 100 shares of QQQ, That's $29,000. So you don't really have $9,000 in cash. I mean, you have, you know, maybe according to the rules, margin rules, you have $9,000 in cash. But according to the rules of derivative trading, right, you own 100 shares of QQQ calls or puts, you're managing $29,000 worth of equity, right? And your leverage 1 to 3, right? Leverage is what kills every bull market, right? It's not the inflation, it's not the recession, it's leverage. How much leverage is in the system, and that usually what causes, you know, these recessions, and that's what usually causes problem in retail traders, right? It's the leverage. Are you leverage 1 to 3? Are you leverage 1 to 10? Are you leverage 1 to 10,000? And that's a problem. All right.